And to discuss more on the real estate sector, we are joined in by Santosh Naik, who's the director of Disha Direct. Mr. Naik, thank you very much for joining. Talking about the real estate sector, we know that the property market, especially in Mumbai and Delhi, has seen slow sales in the past few years. The sales are due to slow sales are due to different reasons, and high prices is one of the most important reasons. So, how you see the year 2012 for the real estate sector?
2012 is according to a mixed year for a real estate sector. The residential segment has done exceptionally well across the India, be it Mumbai, Chennai, Delhi, NCR region. There is a good demand because everybody would like to own a house in wherever he stays. The commercial sector is little slowed down because there is a huge demand. There is a slow demand and huge supply in the market for commercial. Retail, there are a lot of malls are coming up, and maybe because of FDI approval or FDI available in retail sector, I think the malls will pick up. So overall, it is a mixed year for a 2012. Speaking about the pricing is again it's a market-driven pricing. I don't say the pricings are high or low. People want to buy a home. People want to buy a commercial property. They are ready to buy if it is the pricing is correct. So prices are not going to come down in 2013 according to me. They will be steady for 2013.
Right. Now, Mr. Naik, we also see that many policy decisions are yet to be awaited for the sector.
Yeah.
So, how is that impacting the industry?
As you said very correctly, lots of bills are into the different stages of approval, like land regulatory bill, then industry status for the real estate industry, then industry regulatory bill. So all this will have a lot of impact. Real estate impact in a GDP is a very high, but this is a very unrecognized or unprofessional sector. With these bills coming into the picture, lots of professionals will come into. Of course, there are a lot of corporates have already entered into the real estate industry, but because of this regulatory bodies, because if you see the stock exchange, the insurance, all sectors are regulated. If we do a real estate a regulatory body, there will be a lot of transparency will be there, and it will benefit to customers as well as the developer and other stakeholders.
Right. Talking about interest rates, I think the business fraternity and the real estate sector was expecting a rate cut in the recent RBI policy, but it did not happen, and RBI surprised everyone by not cutting the interest rates. So how has that impacted the industry?
According to me, the banks and financial institutions are always, not very ready to, fund to the real estate sector. It is known as a, a very unorganized sector. So we normally don't expect banks and financial institutions to fund, and the rates are very high. Normally banks and whatever the rates are there, we were expecting a rate cut, and today the situation is there. The real estate developers have to go to the other facilities like private institutions or a market where the rates of interest are very high. So I expect this year at least the RBI should cut the rate as early as possible, and whatever the decisions they have taken not to fund to real estate industry, they should open the doors to fund this real estate industry, because it's a very fund consuming sector. The land is the biggest raw material for them. Those are very expensive, and the gestation period is very high. When you start a project, it takes 2 to 10 years to complete the project.
Right.
So the fund availability, if the banks can do, it will emerge as a very booming sector in 2013.
Right. I hope the central bank takes a note of this, that the real estate sector strongly needs capital funds.
True.
Thanks very much, Mr. Naik, joining with us. I appreciate your time. Moving to markets now, Indian markets